doing business in Africa. You can't afford to be without Africa Investor.
I suspect it's not easy for a company of that size to implement a real net zero commitment. What are the challenges, and how are you tracking it?
We are sort of living in a continent where there's lots of aspirations and commitments towards net zero, but getting access to the finance is really the big issue, as I sort of alluded to earlier. So our focus is really on sort of helping to design and deliver public and private finance mandate alignment and getting that more catalytic private investment pathway in place that can ultimately fast track and scale private capital's participation in the green transition. And we're saying that these things are really going to be implemented through institutional investor, which is quite a new terminology, institutional investor public partnerships. And one such partnership that we're driving, the whole net zero platform, on a collaborative basis with asset owners across the continent and around the globe, is through a platform that we've established just to target this space called the African Green Infrastructure Investment Bank. And that's basically just realizing that the countries have signed up, but they need real access to this innovative finance. So we're taking an industry-wide and cornerstone investor approach through this particular platform. You have to realize that there's no leading purely green financial institution in Africa that can address and support, what is probably around $3 trillion worth of NDC investment project needs by 2030. That's the nationally determined contributions. That's $3 trillion of opportunity as we see it. And we know, by the same token, that Africa possesses an astonishing technical wind potential of almost 180,000 terawatt hours each year, which is enough to satisfy the entire continent's electricity demands 250 times over. So we've come together with the governments to do some of that important work, as well as an asset owner-led, platform that can really drive, this net zero agenda in a very strategic and constructive way. So the African Green Infrastructure Investment Bank is our vehicle to market, as it were. It's been seeded with about $5 billion from African institutional investors, African sovereign wealth funds, African pension funds, and it's anticipating about $20 billion will come from G7 and G20 investment allocators and peer institutional investors. We had to structure it in such a way that it has a certain defining character to it. So it's a unique institutional investor public partnership, borrowing from the models that I think we learned from Canada and we learned from Australia, some of the models that CDPQ and others took around the light rail and some of the other areas where they said PPP projects, and in that case it was pensions public partnership. So we are a combination of pension funds and sovereign wealth funds and insurance companies. So we've adapted that to an institutional investor public partnership model. So this particular platform is, really evergreen in nature around, driving that capital towards a net zero agenda across the continent. 100% commercially oriented in investment for commercial returns and taking some construction and operational phase risks. And again, we have to come and solve real market failure. So we actually took this model and took some of this initiative from the way that the British government established the UK Green Investment Bank before they exited and effectively sold it to Macquarie. So we've created this platform that we believe will continue to be a catalyst, not only our own capital, but as I mentioned before, a lot of this just transition conversation is now moving to private capital, and private capital is saying, well, how can we find a very practical way to align and get into emerging markets on a de-risk basis? And this platforms like this, we think, that are catalytic and able to accomplish that. And we think that it has to be done on a sort of a global basis. So during the G7 meeting that just took place in Cornwall, hosted by the British government, we announced and formed an advisory board for this particular platform of the leading and the largest asset owners, collectively representing about $40 trillion of assets under management. So we certainly believe that if you can get the architecture right, or as Mark Carney calls it, collaborate on some of the plumbing, you can really, provide some kind of catalytic support that can, still deliver good risk-adjusted returns. So that's sort of the way that we're approaching this, John.
Well, it's interesting. You talked about the platform, which is a unique and creative way to get at getting us to net zero. I'm curious, working in Africa, Hubert, are we seeing it from government driving the train on this, or are you seeing the private sector as deeply as involved as we've seen in the US and Canada and elsewhere?
Yeah, I think, as you know, the governments are certainly there from an aspirational standpoint, but again, I mean, what is not there is not there, and that's this innovative finance. So what we are basically saying to governments, we have the capital and we have access to be able to catalyze and mobilize more capital, but we really need to create that hospitable, enabling environment, to be able to unlock that and de-risk it sufficiently so that it represents, a good risk-adjusted return opportunity for our capital. So you're hearing a lot of governments now really following the institutional investment community and private capital in quite a collaborative way and collaborative spirit. So it's an interesting dynamic. And I think a lot of that has been precipitated not only by the climate change and the net zero agenda, but of course, it's so fundamental for our post-pandemic economic recovery strategy. And I think that's really what's thrown us both together and enabled us to provide some leadership as the institutional investment community.
Well, since we have you, I don't want you to hog the whole conversation, but if you can answer this next question fairly quickly, Hubert. One of the questions our session promised to explore is, do investment strategies need to change to meet the net zero targets? Can we reproduce the current model to new types of projects and companies? What do you think needs to happen?
Well, the way that we're looking at this is, which sort of touches a little bit on the point that you just made, and we've heard it said in many different ways, but the way we simply say it is, look, world governments and global development finance institutions recognize that there is no single pathway that can be met to net zero or to meet the SDGs and the Paris Agreement infrastructure and energy multi-trillion-dollar financing gap for bankable green transactions and the real transition without exponentially increasing the scale and the speed of global institutional investor allocations that can be rapidly deployed and perform at the project and the asset level. So for us, I mean, really, we're focused on, again, helping that effort by establishing a conducive legal and regulatory framework to deliver for this 100 trillion plus pool of capital. We think that's absolutely key. And I come back and sort of repeat that phrase again. It's that replumbing of the financial system that is going to really make the difference here. So we've come together. I actually also chair the New York board for the CFA's Asset Owner Council. And we've collaborated now with the global law firm DLA Piper. And we're developing a draft global model law, in fact, which we're presenting on Wednesday during COP26. And this draft model law is a very specific piece of legislation that's going to be focused on institutional investor-public partnerships, as I mentioned. And it's really a future-looking legal and regulatory partnership framework initiative that supports the goals of Paris Agreement and the net zero for governments and institutional investors to do a few things. Firstly, to be able to mobilize private capital at scale. We don't think that enabling environment exists in its sort of optimal form at the moment. It also exists to be able, or the model law will basically focus on assisting and creating a pathway to be able to deploy capital at speed, deepening green secondary and capital markets, and really stimulate and support innovative private sector project developers. We're currently operating in a market where it's for a far less value. We're seeing the PPP legal and regulatory framework, which is much smaller than the 100 trillion plus pool of capital. So there's no real legal architecture in place to be able to de-risk these investments at the present time or create predictability. And what we're actually doing with this piece of legislation here and this particular approach, recognizing that it's no longer business as usual, is to basically disintermediate some certain players, a little bit of social distancing from intermediaries that might basically disrupt the ability for our capital to be able to get straight to that large pool of NDC projects. So this particular approach, we're basically saying the governments that will be developing the nationally determined contribution projects should not have to be intermediated by development finance partners. We're simply saying that governments with with these multi-trillion needs for financing can work directly at a large scale and a programmatic level, subject to creating that hospitable environment for our capital to be de-risked and to be able to be deployed at speed. We can have that direct relationship as asset owners with government, so we can deliver on the mobilizing capital at scale. Because look, we all know that the capital is there. The question is, how can it be deployed in a predictable way, that is responsible and enables us to deliver our fiduciary responsibilities. So that's the way that we are approaching this, so that our capital can be deployed at speed through a direct relationship, through an architecture and legal instrument. It doesn't exist today, even though there are many calls for let's mobilize these very, very large pools. But there's not a legal architecture for it to happen. So that's one of the ways that we're approaching this business unusual.
Doing business in Africa, you can't afford to be without Africa Investor.